Today I want to talk about Gevo Inc. Gevo has dropped to only $3.16, so in this video I will give you my prediction of what will happen in both the long term but also in the coming weeks, and a share price that I believe that this will not fall below. Gevo announced their Q4 and full year financial report this week. The main focus of this video will be to analyse this report, but I will also look at the charts and some interesting news updates. This is well worth watching, but if you have no interest in the most important aspect of any company, then this video is probably not for you. But if you do want to find out information that other channels don't actually look into, then consider subscribing. Now, onto a very quick summary of the company for anyone that's new to Gevo. If you know all about the company, then feel free to skip the next 60 seconds. And if you do enjoy the content or find any value in this video, can you help me out and smash the like button and help me hit a target of 500 likes? Who are Gevo? Gevo Incorporated is a renewable chemicals and advanced biofuels company. Focused on sustainability, Gevo addresses the market need for reducing greenhouse gas emissions with sustainable alternatives, and is commercializing the next generation of biofuels with diesel, gasoline and jet fuel that have the potential to achieve zero carbon emissions. Gevo uses low carbon renewable resource-based carbohydrates as raw materials and is developing renewable electricity and renewable natural gas for use in production processes, resulting in low carbon fuels with substantially reduced carbon intensity and substantially reduced greenhouse gas emissions. Gevo believes that its proven patented technology enables the use of a variety of low carbon sustainable feedstocks to produce price competitive low carbon products. In addition to addressing the problems of fuels, Gevo's technology also enables certain plastics such as polyester to be made with more sustainable ingredients. Gevo currently operates two main plants where feedstock is separated into its components and the starch goes to the fermentation process to make biofuel, while the protein becomes animal feed that is fed back to cows, which they use to produce natural gas. Gevo produces a range of products such as jet fuel across a wide range of markets, including the aviation industry and the automotive industry, providing Gevo with an enormous total addressable market of 888 billion gallons per year. Now let's look at the latest earnings report from this week. So first of all, looking at the recent corporate highlights. On December 7th, Colmar America and Gevo signed a fuel supply agreement for 45 million gallons per year. If you remember, this was actually the largest supply agreement to date for renewable fuels. In November, Gevo signed a memorandum of understanding for feedstock with Sweetwater Energy. In October, ADM and Gevo signed a memorandum of understanding to support the production of sustainable aviation fuel, and Gevo entered into an agreement with Axens for a strategic alliance aimed at accelerating the commercialization of sustainable ethanol to jet projects. Then we can see here that in December, a US Department of Energy Science and Engineering Research Center reported the preliminary results of its life cycle analysis of Gevo's planned net zero plant. ANL's preliminary findings, which it says here, were consistent with Gevo's findings that when renewable energy is used to power production processes and the corn is produced with climate smart AG practices that drive the carbon intensity score of corn down, then the sustainable aviation fuel that would be produced could achieve net zero life cycle emissions when measured against ANL's GREET model. When carbon capture technology is added to the decarbonisation tool, the life cycle emissions should be negative according to the model. And in January 2022, Gevo's renewable gas facility in Iowa began a startup operation. The startup process is expected to take a few months and reach a steady state operation in the second quarter of 2022, which will allow time for Gevo to apply for credits under the Renewable Fuel Standard program and the Low Carbon Fuel Standard in California. So Gevo expects to generate biogas revenues starting in the second quarter of 2022 and sales of revenue from FRS and LCFS in the second half of 2022. They expect that the project EBITDA should generate approximately $16 to $22 million per year by 2023, depending on a variety of assumptions including the value of credits under these programs. Now it's very important, as we will see from the financials in a moment, This is much needed revenue, but it won't begin until the second half of the year. Then we won't see any of this begin to be reflected in the financials until Q3 at a minimum, which means November 2022, judging by last year's reporting dates, so this could be a long time before we see the stock price really begin to recover. But there is only so low that the stock price can reasonably go right now, and I will explain why that is in just a moment. So this continues with the Net Zero 1 update that shows that Gevo has switched to an ethanol fermentation process that will offer several advantages going forward, such as lower capital costs, increased production capacity, lower technology and execution risk, but most importantly, the hydrocarbon plant design for Net Zero 1 can be used at any ethanol plant that meets certain sustainability and carbon intensity score requirements, which should enable Gevo to grow more rapidly to meet demand. So we all know that these early growth stage companies have taken such a hit over the past year. Market optimism is all but gone. So it is now more important than ever to grow as fast as possible. Gevo expects final site selection for Net Zero 1 to occur in late 2022, targeting Net Zero 1 to be complete in late 25 and operational in 25. Now this is a long wait. We're talking about 3 years for a company that has very little revenue. But in the end, Net Zero will be generating approximately, as it says here, 150 to 200 million per year. Now, looking at the income statement for full year 2021, we can see that Gevo had total revenue of just over $700,000 and a gross loss of 11.4 million. Now, if you follow my channel and you watch all my videos, then you are very well aware that I hate to see companies that are unable to turn a gross profit. The logic behind it is very simple. If a company is not able to generate a profit before taking into account of the operating expenses, then in my opinion, these companies can never be profitable. The basic theory on this is that a business must sell their products at a higher price than they cost to acquire them in order to generate enough income to pay for operating expenses such as salaries or overheads. But there is a few exemptions to this general rule. So companies involved in the energy industry or the oil and gas industry, for example, can easily rack up hundreds of millions in expenses over several years before they ever see any real revenue. For oil and gas companies, for example, the payoff comes when they find oil, and suddenly after years of losses, these companies become extremely profitable very quickly. Of course, these are high-risk investments because there is a huge risk that it doesn't work out or that they run out of money before ever achieving their goals. So Gevo fits perfectly into this category. As you can see here, the company is making losses year over year, 26 million in 2019, 26 million again in 2020, and now 60 million in 2021. Now that could easily be seen as the company is becoming less and less profitable. But a better way to judge this is that the company is growing much more than it had been in previous years, and the growth is costing far more money. Pushing ahead with the projects on the scale of Gevo's projects costs a lot before they ever see any revenue. As we can see here, the research and development expenses have doubled this year, whereas project costs have gone up from 1.6 million in 2020 to 10.5 million for 2021. And the overall net loss for the year was 59.2 million with a negative EPS of 30 cents. And looking at Q4 in isolation, this alone had a loss of 16.5 million and an EPS of negative 8 cents. Now, analysts had been estimating a loss of 7 cents, so Gevo missed analyst targets for this quarter once again, and this seen the share price drop on after hours Thursday and again on Friday. But let's be realistic, they've only missed their target by 1 cent. So I feel like the 10% drop in the stock over the past 2 days has been a huge overreaction to results that were largely to be what was expected. The most important part of any earnings report is the overall health of the company as a whole. And this is not measured by a company's performance over 3 months or even 12 months. This is measured by the company's balance sheet. And this is key for Gevo, just like every other company. Think about this. It's not unheard of for profitable companies to go bankrupt because they are unable to pay their liabilities or debts, but it is unheard of for a loss-making company to go bankrupt if they are able to pay their liabilities. This is why I always give focus to balance sheets when analysing, because this is where you see the real health of a company. Looking here, we can see that Gevo had total assets of 666 million and total liabilities of 119 million. This gives Gevo an asset to liability ratio of about 5.5 to 1, which is very healthy. But this also means that Gevo has total stockholder equity of 547 million. At the moment, Gevo has dropped to $3.16 a share, which equates to 638 million market cap valuation for the company. So looking at the shareholder equity of 547 million, a share price of $2.70 would make Gevo have a price to book value of less than 1. So this is a price that Gevo will not reasonably fall under, or at least I believe that the stock is currently at or near the bottom in terms of its valuation. This is a valuation that would completely disregard the entire operation of the company, and for this reason the share price should not drop anywhere near 270. Looking back at the balance sheet once more, Gevo has total current assets of 351 million as opposed to current liabilities of 32 million, giving a current ratio of 11 to 1, so Gevo has nothing to worry about financially over the next 12 months. As I said a moment ago, Gevo has made a loss for 2021 of $60 million. Their current cash position is 40.8 million. Since these financials were released Thursday evening, I have seen a ton of comments looking at their losses and their cash position and saying that this company will need to dilute in order to have the cash to get through the next 12 months, and this is simply wrong. First of all, although they have current cash of 40 million, they also have restricted cash of 25 and long-term restricted cash of 70. Then they have the current marketable securities of 275 million, which is there if they need it, and long-term securities of a further 64 million. So Gevo are well able to pay any debts that might arise over the next 12 months at least, if not far longer. Looking at the chart over the past 6 months, we can see that this was actually going fairly steady until November, and suddenly, like a lot of Nasdaq and other growth stocks, it suddenly plummeted. Gevo lost more than half its valuation from mid-November up to mid-January, which is insane for any company, and has an overall 80% drop since the bull run ended in February 2021. And we can see here just how steady that drop was. First, an incredible drop in November, followed by a 40% gain that I've highlighted here, going from 450 up to 650, and then again a drop down to about 285 in January. As I said a moment ago, 270 should be seen as rock bottom, and I do not see the share price dropping to that, or at least not staying anywhere near that. When we look closer, we can see that over the past couple of weeks, the stock has been moving sideways in this channel, having hit support and resistance a few times, and where these have been broken, the stock has bounced back very strong. I consider Gevo to be a very long-term play, with the real goal of the company still being years away. But I do still expect that Gevo will move back up again over the coming weeks, and I would be very surprised if we do not see at least 350 during March. But that is a very low estimate compared to what the analysts think. Looking at MarketBeat, we can see that the analyst price target consensus is $7.50 with a strong buy rating. The most recent of these has come earlier this month when Citigroup initiated coverage with a buy rating and a price target of $5. This is the lowest analyst price target that Gevo has received, but still offers over 50% upside potential. And we can see that Gevo now has institutional ownership of over 34%, with a lot of buying done throughout 2021, with the likes of JP Morgan and SquarePoint increasing their holdings by over 600% in Q4, while State Street and BlackRock remain the biggest institutional investors in Gevo. I came across this article on Reddit yesterday. I thought it was a very good read. An interview with Lake Preston's mayor talking about what the Gevo plant will bring to the area. So the city of Lake Preston has put a lot of work into seeing the Gevo Inc. plant become a reality. By midsummer 2024, the hard work should pay off and Gevo's jet fuel plant will likely become a reality. The city of Lake Preston has put forth a tremendous effort to prepare for the construction of the Gevo plant. I'll put a link to this in the description below, it's well worth reading, so check that out. But most importantly, what do you think of Gevo? Do you disagree or agree with my analysis? Let me know in the comment section below, and if you've watched all the way through this video, you are a true legend. And make sure to check out some of my other videos on the channel. Subscribe if you're new and turn on notifications so you never miss out on my latest video, and have a great weekend.